This stock was once one of the riskiest on Wall Street. Now it's a hidden gem. What if I told you there's a company that used to be one of the riskiest stocks on Wall Street, full of debt, shaky earnings, and panic among investors? No. It's quietly becoming one of the most promising turnaround stories of this decade. And the catalyst for this transformation? A massive strategic deal that's strengthening its core business and market position like never before. Stick with me because by the end of this video you'll know which company this is, why it became risky, how it's recovering, and why it could be a hidden gem today. Back in its earlier days, this company carried an image rooted in risk. Mounting debt, missed guidance, product delays, and investor disappointment. Wall Street flagged it. Analysts questioned its management. It wasn't the kind of stock you wanted to hold during a market downturn. For years, the risk premium priced into the shares made it unattractive, until now. Then everything changed. The company found clear leadership, pared down its liabilities, and pivoted toward sectors where it could dominate. One of the biggest turning points: the announcement that NVIDIA and Samsung are collaborating on an AI-driven manufacturing facility powered by over 50,000 NVIDIA GPUs. AP News. That deal signaled something more than just business as usual. It showed the company is now part of the future of computing and manufacturing. With this kind of backing and strategic alignment, the risk profile of the company is changing fast. Let's look at the facts. Debt to equity has dropped significantly. Free cash flow has turned positive after years of deficit. New strategic partnerships, like the Samsung-NVIDIA deal, give it access to advanced technology and manufacturing capability. Analysts are starting to mark it as undervalued relative to its peers. These metrics tell a story. Once high risk, now repositioning for growth. Because of that, the stock might still carry a discount compared to other growth players, giving early movers an opportunity. Now, you may ask, wait, isn't this company NVIDIA itself? Yes, the turnaround story here centers on NVIDIA. Once a more speculative tech company, NVIDIA had risk in its past. Heavy R&D spending, competition, and reliance on specific markets. No. With this partnership, the business model is evolving. NVIDIA isn't just a GPU designer. It's becoming infrastructure for the AI industrial era. When Samsung commits 50,000 plus of NVIDIA's GPUs to its AI factory, it demonstrates massive demand, integration, and future revenue channels. For investors, that means a lower risk profile plus higher upside potential equals hidden gem status. Here's what you need to keep in mind. The market is beginning to reward companies with real strategic moats and long-term partnerships. NVIDIA, via this deal and others, is building a moat in AI infrastructure. The risk that once discounted the stock is being reduced. Higher cash flows, deeper partnerships, clearer growth path. If you believe AI and manufacturing automation are the future, then this stock could be underpriced for what lies ahead. But remember, no investment is without risk. Supply chain disruptions, regulatory headwinds, or slower than expected execution could all impact performance. So there you have it. Once viewed as a high-risk tech stock, now potentially a hidden gem thanks to fundamental turnaround and strategic momentum. If you enjoyed this breakdown, hit that like button, subscribe to NextGen Finance, and turn on notifications so you don't miss our upcoming video, Top 5 AI Stocks Positioned to Explode Post-2025. Thanks for watching. Stay smart, stay curious, and invest with purpose.